I think T's done with his stream, so figured I go live now. I don't think Kiko's streaming. Let's see. Mm, when was that? Yesterday? I don't know. I guess he hasn't streamed in a minute. All right, we're good. We're good. We're good. We're good. Where we at though? All right, I don't have anything planned. I was kind of just gonna answer the questions, chill out. With my YouTube, uh, here. Right here. I'm gonna go outside. I'm gonna let the dog out. All right, I'm back. Damn, this video went crazy, low key. Uh, yeah, I do. Someone has it though. Um, ask. Shit. Hold on. Whoops. So I didn't report it. Someone did. Mm, where the heck is it at? I have to like save the link so when people ask for it, here it is. Uh, post it in here. How old am I? I'm 24. I'm a unk. I was talking to my little brother earlier because I'm watching him for the weekend and my sister, but what's this right here? So is that one guy in the stream? Uh, no, he's not. Is that Kiko's profile picture? Funny. Jay, are you in here, Jay? J. How the hell? Oh yeah. Nah, it was long as hell, dude. How long have I been trading? I've been trading for like 5 years, but like 3 years it was like absolutely useless, you know? Just going through the bullshit of like you know, retail and like supply and demand and all that crap. It did not work for me. But I've been doing ICT for like a year and a half or something like that. Maybe a little bit longer. Maybe a little bit longer. But yeah, who was here from the last stream? Is this guy gonna join or what? We need to go over something. You guys want to ask questions? Or something? I don't know what to really go over. I'm just chilling. Alright. Mm, 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 mm. I've seen some of you guys before. Okay, not everybody. I know you. I know you. I know you. I know you. That's it. Oh, there you are, Jay. Jay, ask your question. What was your question? Let's go over. You asked something like, Jay. You can type in. You see this little chat right here? Click on stage in this little open chat. You can type your questions in there. But so, what's the correct information to study? I've been stuck in phase confusion. All right, sure. We can go over that. All right. So, does everyone know what MMXM is? Like MMXM models? Like we've all heard of, like, you know, internal range. So, like a fair value gap, price draws into that. So basically, you have like a range, premium discount, ideally, and then price draws into here, and we go from IRL back to ERL, which is just the external range high. Um, so that is MXM. The phases of delivery is in distribution, uh, is MXM, as well as the kind of. There's really two ways you can draw into a POI. That's where people get confused and they don't see like these consolidations when we expand into a key level, because that can happen, right? You can expand into a reversal into a key level, and then once you hit a key level, you get a new phase in price, where then you can expand out of this. So like, because a reversal is technically expansion, expand to a key level, and then you're not going to have consolidations here. Only in like a retracement is where you're going to have that low resistance liquidity. But that doesn't mean it's not an MMXM. MXM is extremely overcomplicated by people. Um, my screen's frozen. Damn. Hold on. Hello? Are we back? I had this little thing on my screen. What's up? What's up with that? Yeah, I can repeat it. All right. Bruh. Just going over like the different models. So we all know what like internal range to external range is probably. It's just a fair value gap inside of a range, and you expect the range to continue. Like we have bullish structure. You could think of it that way. We draw into premium discount, into a fair value gap, and we expect the low of this range to be made inside of this fair value gap to then create a new range, right? And then this is going to create a fair value gap, and then vice versa, right? We keep going. So what is external to internal is when we take out this high, for example. This distribution creates a fair value gap, and then we're trading basically from here to here. So that's just simple, like internal to external, external to internal. That's basically what like most people trade. This is my favorite version of MMXM, and it's just, you can think of it like a turtle soup, I guess. Right? You're gonna take out a low. You're gonna frame your trade back to the high. They're gonna manipulate a range low, target the opposing side of the range. It doesn't even have to be equal highs. Be like this. All right, and this we're gonna have like SMT and stuff. I think this is the easiest way to trade, to be honest. I think it's much easier than internal range to external range, because this is a manipulation here, and then it always looks the same. Like it usually looks the same when you manipulate a low, higher low. It should be with speed back into the other direction, um, and then this is your uh, level you want to see traded away. It can be really hard sometimes when there's like multiple fair value gaps. You know what I'm saying? It could be confusing, but with when there's just a low, it's just like it's just one low. It's really easy. It's like a more precise reversal point, And then we have SMT like this. Hold on, am I good still? Am I good, guys? I think I am. Pretty sure I am. All right, I'm just making sure. But yeah, if you guys just stuck with this, I promise you, your trading would change. Because it can be like this too, by the way, guys. Like it can be like SMT like this with the range low. The other asset will manipulate this range low, and this is where you're going to use power of three. Like this is where you want to see that small opposing run. So let's say the daily opens right here, right? We make a low, that small opposing run with SMT. We can even take out this low, right? And so we want to trade expansion candles. So once you have the power of three aligned with an MMXM, this is when you get really good trades. Um, right, you have a breaker and whatnot. And then after manipulation, what do we expect? We expect distribution. So this is when you actually see price action hold. And when you see it not hold, it's as simple as like, this is when you know that the MXM is likely to fail. So if we did some shit like this, we start to displace lower like this or something, especially if you're like SMT at this high, you can actually flip your bias. And this is something I didn't go over because I don't want to confuse people. But with this model, with the model that kind of use with the small opposing run and whatnot, if this is the daily open, I'm kind of like going off something like completely off topic, honestly. But um, you basically always have a validation point in an MMXM, right? When we actually create order flow, there should be protected lows in order flow, right? So at this point, when we create this opposing candle, right, this is the protected low. When you create this is the protected low. So if we actually have SMT through range high, and then maybe SMT like with this high or whatnot, and then we change state delivery down, right? And then we're starting to respect, stuff like this, PD raise here, fair value gaps, whatnot. And then we're starting to see this range from high to low fail, but you still have that small opposing run. If this is created in a key time and whatnot, then you can just trade the other way, pretty much. Um, this is on any MXM, but I don't want to get like off topic though. It's kind of random, honestly. But basically, this is all you're gonna trade, like this. This is what you want to see, right? You want to see price holding and stuff. And inside, let's say this is this is hourly time frame, right? This is the daily opposing run we want to see to create that daily expansion candle. Inside of this hourly distribution and stuff, you're also gonna have 4-hour power of threes. So what do you want to see? The same thing. We want to see those small opposing runs, right? And we want to see the small opposing run into order flow. You're gonna have SMT at those 4-hour lows and stuff. We can look at NQ on Friday. You're gonna see the same thing, right? So, like I said, we want to have that model where we take out a swing point high, right? So we take out a swing point high. There is no SMT, but note the small opposing run. So we're pairing this idea of a manipulation, right? Taking the high and order pairing the buy stops with these sell stops on here, right? So very simple. And then we match that with this opposing run, small opposing run, right? So we can have that expansion candle on the daily. So again, this is the hourly time frame. What are we going to have inside of here? We're going to have 4-hour power of threes as well. So when we open up at 10 a.m., so let's look at 6 a.m. So 6 a.m., what did it do? Manipulate the range high. So when will the actual move occur? The next candle, because note how far this open is, right? This open is very far. So this is why we demand a small opposing run, because this is not going to be a reversal candle or an expansion candle, sorry. It's going to form that candle to reversal candle. So this is why we wait for the next candle. This is when the distribution will occur. Hopefully that makes sense. So we drop down. Now we want to trade the 10 a.m. power of three if 6 a.m. manipulated. Then 10 a.m. will distribute. So we open up at 10 a.m., open high into order flow, and we also create SMT at that candle high, which is really what you want to see. That's like really good confluence, right? So when we start to break down a lower time frame, whatnot, this is my trade just to this target. It was like 2R. Um, I just closed fully right here just because it's Friday. And yeah, we basically took out this low in that same 4-hour candle. So once you take out a significant low, we get a new phase of price. So expansion, new phase of price. It's also towards the end of that 4-hour candle. So we just consolidate. And if we're going to distribute again towards this low, it's going to wait until that next 4-hour candle, right? So what do we want to see? A small opposing run again to what we have into order flow. So these highs, and we also create SMT again, right? Same thing over here. And then we distribute. To see how practices. We can even go to gold on Friday. The same thing every single time, guys. Let's go over here, right? So we had this SMT, so this hourly candle, 8 a.m. We purge this high, right? And this is why I think highs and lows are just so easy because you might think that this is an order block to trade. I don't know, whatever. If there's like a fair value gap here, you're just gonna take less losses. Um, if you just use SMT with highs and lows, and then just frame your trades off highs and lows, and then match it with that small opposing run, the daily, right, and the 4-hour and all that, then you're gonna have success, right? So we're gonna wait for this candle to close, right, because we're not going to reverse. Same thing like any candle. I'm not gonna trade this hourly candle once you purchase high because it's not gonna reverse in this candle. It's gonna do the next candle. This candle manipulated, the next candles will distribute. And I want the same thing in the hourly chart, right? I want small opposing runs because I want to trade expansion candles. Any time frame, I want to trade expansion candles. So as you see, they both have small opposing runs. You can drop down to the 1 minute, the 3 minute. I don't trade gold on the 1 minute. The 3 minute is like fine though. So where's that open at? 9 a.m. right here. So this candle, the 8 a.m. candle manipulated, and then you can just see the stage of distribution, right? You have like the lower sell right here. You could take that. Uh, you have a propulsion block here. I don't know if we take this high, do we? I didn't even trade this, but there's like equal highs. What the hell? See if there's any SMT there. Just curious. Oh, even better. Like, look at this. Even better when you have a lower time from SMT. So, yeah, we do have SMT. So, this high right here purged not only this high, but this high is also holding up here. It just adds to your narrative, right? You have the hourly SMT. Now you have the lower time from SMT. So, when we get this chain of state delivery here, this is now a protected high right here. This is the really good entry right here off of distribution. And then you have the propulsion block off of that. And yeah, so once we start to take out these lows, especially these lows, you want to take the majority off. And then it's just about managing, right? You don't want to enter after we take out these lows. I just wouldn't do it, especially on the lower time frame, these lows, because you're usually going to get a new phase in price. Oh, wow. We have like a bunch of lows actually, especially these lows. Like this should be your final target for the day. I don't know if that gets hit. Yeah, so once the final target gets hit, again, new phase of price, you get choppy and shit. So you don't wanna trade that, especially on low time frame. You just need shit on. Can you show us in real market? What do you mean? Like you might stream like live and trade live? What would you consider game changer? Um, I don't know, bro. Probably understanding that power of three is mainly everything. I mean, um, yeah, probably that. Power of three is literally everything. If the as well, right? So just go here. So power of three as in like we're not going to reverse the same candle that we hit something usually. So previously, I would drop to lower time frames as soon as this candle hit this PD right here, and as well as this one. Let's say this fair value gap. Like I want to trade the next day after that and confirm that power of three. And I have a whole like rule based system that I went over um, yesterday. Right, this candle hits this key level, right? And it's like the same thing. You look for SMT somewhere. If there's no SMT in the higher time frame, you look on the lower time frame. So let's go look real quick. I don't think there is any. Yeah, we can check on the hourly, but I don't think there is any. Sometimes there's not. Fine. Yeah, I don't really see any, bro. Dun, dun, dun. Okay, you get a little bit of SMT here, I think. Yeah, so you see this fair value gap? This is why you confirm it. So look where the daily opens. It opens right here. So what do we want? A small opposing run. The farther we trade away from the daily open with this opposing run, now this starts to invalidate a bearish expansion candle. It can no longer be a bearish expansion candle. This is like some crazy news in New York or some shit. As you see, like right here, there's news right here. But yeah, it only could be a reversal candle, kind of looking like a decisive candle. What do you call it? But it's more likely to close bullish, especially because the previous day hit this key level, right? Um, but yeah, there's like a little bit of SMT here, as you see. So it's just a key level being hit, right? You want to ideally have SMT, and then also, so look here. This is more what I'm looking for right here. So 4 hour candle hits the key level, right? So I want to trade the next candle. I want to trade it higher, right? And then you have the SMT with that candle's low. So just like the daily, where I don't want to trade this candle when we hit the key level, I want to trade the next candle. You can think of it as expansion, retracement, and then the next time opening is will kind of activate that next phase of IFTA or whatever, like whatever you wanna. I don't care what the actual like logic is or ideology behind it, but it's just a simple little method. You can use it on the weekly, right? Like so, look here, this fair value gap, right? Once we hit this, the next week will expand. You can use it the order blocks too. So you see this down close candle. Better yet, let me use this too. You see this candle hits this fair value gap. So the next week will expand likely to towards this level. Right, so expand, and then this week do some fuck shit. Let's see if we create SMT anywhere. I need to bar play this so I can see it's better. All right, cool. Yep, this is great. So this week created SMT, as you see. So now we really expect this to expand because it also hit this these opposing candles, right? We expect this next week to expand towards these failure swings. So you can get whole week of bias like this, right? So it's like this week hit the key level, so next week you'd get this whole week, right? And then you'd be expecting this week to be an expansion candle. But what do you do to confirm it? We want to see a small opposing run, which we didn't have, as we saw. You gotta also look at what price did. So we also created S&P at these highs, the previous week's high, so that could demand a pullback, um, as well as we are, yeah. So you can see it right here, right? So this should not get broken. If we're gonna go higher, this is not an invalidation point. We already mitigated the opposing candles. So this is what I mean by understanding how to invalidate this bias, right? We should not do this, right? You see this small opposing run up here, and then we're displacing lower, right? This should be a protected low, right? We already dug deep into this level, right? There's no reason to come back down. So this SMT, which day was it that created the SMT? It was, hold on. Oh, it was the week actually. So yeah, the previous week created that SMT. And then once you see this, like these little equal lows and shit, we're likely to go take that usually. And then as you see, this is where you want to see like SMT at the high of the day, which you don't really have, which is fine. But this is that chain of state delivery on the hourly. So coming into the day, um, right here on Monday, the hourly is already aligned bearishly, right? And so you're opening up right here. So you want a small opposing run, right? And then you can demand this elo be hit, but really it's not just going to touch this and then drop immediately. Obviously, we need to like come up higher. We could fuck around, right? Because we have a range from here to here. Let me delete this shit. You have this range to this range. We just need the higher of the day to form above this level, above the open. So it comes lower, doesn't create an opposing run at all. So then we come back to create it. So it's like generated liquidity almost. It just generates this high, beeps this high. And then we don't need an hourly, at least I don't demand an hourly CSD because I just demand an hourly CSD to activate the sell program. So this is like a stage of distribution. You can use like a 15-minute, 30-minute, whatever you got to do. But I just like to do this. So you see this key level here, or I can even use the hourly, right? So this candle hit the key level. My rule is I want to trade this candle lower. Now it's not in session, but I would want to see this candle go lower. And if it doesn't go lower, I want to see an indecision candle, like the next day model. As you see, it does that, and then the next candle have to expand. And then this is simple, like you want to trade London session, you have this fair value gap now. So now you have higher resistance at the high of the day, which is important, right? You want to trade away from high resistance. You want to target low resistance, as in these failure swings. So it's the same rule. So this candle hits the key level. I want to trade the next candles after. So if we go here, I would want to trade here, this candle. And if this candle already CSD'd, so this is just an expansion into reversal. So the CSD is going to be really far. If it's a retracement, this is going to have that CSD like right here. So when it's like this, you can either drop down. Whoops. You can either drop down to a lower time frame to find a CSD, but again, really far. Or you can use you could be like dodgy and use a inverse fair value gap or something. But yeah, I don't really see anything here, honestly. I don't really do that entry. But it's like the same thing. So you see this candle manipulated, so I want to see a small opposing run and then distribution away. So you could like the lower end of this range, this fair value gap that you see. Just showing you different ways you could do it. Once you see this lower end fair value gap, this should hold. If this range is gonna hold, this lower end fair value gap should hold, right? The discounted one. When that fails, right, you have that small opposing run up, kind of creates a opposing candle. You could put your target right here or your entry right here, but it's not something I like to do, honestly. I like to see like more obvious stuff, like something like this. Well, that's just SMT there. Like that's the only way I would do it, but there's not. Yeah, if we did something like this though, sweeping this high, then I would feel more comfortable. Or if there's SMT, but there's not. And sometimes there's no entry. That could be an entry, but not for me. But yeah, I was kind of yapping. What the hell am I be talking about at this point? But yeah. Um. Oh, I don't use indicator. Oh yeah, it's just a power of 3 indicator, pretty much. Where are we at right now? How you have higher temp candle, low temp. Yeah, it's an indicator. So I think there's a free version, but this you can if you're in the lens, like he trades shares his paid indicator, so kind of like a lens thing, I think. But I think there's a free one that's like the same almost. Time frame alignment, yeah, sure. So you're gonna use like same thing like a market maker model, right? So let's go right here. I remember this price section because we had this SMT this day. So first, what did the previous week do? Let's see. Okay, so this is where this week we hit this key level, right? So we expect expansion. You see all these fair swings here? So all I would need to mark out the weekly open, which is right here. All I would need is all I want to see is on the weekly chart, a small opposing run because I want to trade a weekly expansion candle and I want to trade a daily expansion candle as well. So if you go here to this day, first let me pull up like let me make sure these are aligned here. All I want to see, so this is a Monday, right? Yes, a Monday. I would ideally want to see SMT created. If we're going to come this low, I would like to see SMT, but I don't think there is any. If I go to like here, there might be SMT. There's not. Yeah, that's crazy. But that's fine. So I would need an hourly CSD, basically, right? Because this previous day created that SMT, so that reversal. So to confirm reversal, I need that hourly CSD basically. And again, this is when you see order flow be respected, opposing candle supporting price, and then rejecting lows. Here, rejecting lows. So once this is aligned, then everything is aligned for me. So now it's just about in this stage of delivery here, these expansion candles that I want to see price happening. I just want to see small opposing runs. If I don't see that, then I'll trade the next day. I'll reevaluate. I won't trade that day because I want to trade expansion candles. If that makes sense. But time for alignment for me is just confirming the reversal. So I don't really use the 4-hour CSD. I know that's the weekly 4-hour. I don't really do that. Um, monthly, like let's go look at some monthly stuff. It can work the same way. Try to find like when a monthly candle like created SMT or hit a key level. Kind of like this one, right? Same thing as any time frame. So on gold, we hit this key level, but on silver, we did not. So it creates an SMT. So you have both checks, right? You have a uh, a key level being hit and SMT, and then this is your external range target. So just aim from the external. Now, if you drop down to the daily inside of this wick, we might already have the time frame alignment, maybe. All right, so let's start to look here. So now I see some more SMT. Those draw our monthly open. So see how price is waiting for the next month to distribute. And then we also have this SMT here that we purchased low. And then what I would wait for is this chain of state delivery ideally, pretty much. Okay, once that's aligned, and then the first week I would want to see distribution. So you just use a weekly profile. So Monday, Tuesday, right? What do we have? Tuesday low of the week. And then you want to look for SMT there as well. Do we have SMT there? We do. Right at the low of the week. It's also a reversal candle. What do you see at the opposing side of that? You see all these low resistance liquidity. So this day is an easy expansion day, ideally, right? Which you would anticipate. So yeah, I would just look for that. Then inside of this distribution, this monthly distribution, you're gonna have weekly candles, right? And you look for the same thing. You look for the small opposing runs, right? Into what? Into fair value gaps, into order blocks and all that. You look for SMTs. Because you see this candle here on gold or silver, we actually reach into this order block, but we don't do that on gold. That's just a oh sorry, I'm not even using I'm using gold euro, which is fine. Another way you can use SMT. Let's actually look over here on silver. Okay, so we actually manipulate this low on silver, which is cool. Look for the same thing here. Oh wow, yeah, look at this. So this candle here, this retracement after hitting this external range high actually creates SMT. So if the previous day manipulated, right, what will the next day do? Expand. And you want to use weekly profiles again. So this is Monday. So if Friday manipulated, create the SMT, what will Monday do? Expand. And yeah, it's the same thing. Into this external range high. That kind of makes sense. So SMT will activate. So basically, if you want to trade like uh, a daily expansion, so just like any time frame, you ideally want to manipulate something significant, like some weekly lows or like monthly low or monthly key level, right? If I look over here, go to the monthly time frame and look for the same thing. All right, we can even look here. We use the same model that I use. Right, this candle hit the key level, so I want to trade this candle here, right? And it's an expansion candle, so what's the rule? I want to see a reversal off this candle's low, right? And then what do you see? We have the SMT, this swing point low, and also, no, I'm lying. We don't have SMT with the candle low. We have that SMT, right? And we also even are coming into this fair value gap. So you get best of both worlds. You have like a turtle soup into a fair value gap with fair swing to target, and then also this SMT. So inside of this distribution, you will have daily expansion. This is gonna reject lows. You're gonna even have like weekly key levels and stuff. So the daily can look bearish for a little bit, but it's just a new phase in price, right? You take out a swing point high on the weekly or whatnot. You might even create SMT. Let's see. No, we don't. Oh, we do. We create this SMT. This is when you can expect, uh, some retracement back to what? Back to a key level, right? This is all in influence and in line with the idea of the monthly chart, right? You can see this little consolidations and whatnot. And then, once we distribute here, same thing. Going to look on the daily. It's going to scare you a little bit, maybe. This is why we use power of three on the weekly. And we use all the time frames, right? It's the same thing. So you see this candle here reaches into the key level. It's an expansion candle. So I want to trade the next candle. What do I want to see? A small opposing run sweeping up that candle's low. The same thing every single time. And inside of this, now you're gonna have daily expansion. Look in here. Because we've reached into a higher time from key level, we reached into a weekly key level inside of a monthly distribution candle. So this is when you get daily order flow. Look, right? This candle changes state delivery, so it's aligned, right? You have this candle reach into key level. I want to trade the next candle expansion, right? This key level here gets hit. I want to trade the next day. You get it? It's the same thing every time on all time frames, guys. This candle here, whoops, this candle reached into the key level. I want to trade the next candle, right? And also note how the weekly profile also aligns with this. We are trading a weekly expansion candle. So when you're actually trading a weekly expansion candle and price trades away from that weekly open, these models up here are likely to hold. Hold on, I gotta let my dogs in. All right, that's enough about that. But hopefully, I answered your question. Um, are you familiar with Turtle Soup? Yes, I love turtle soup. But there's like multiple ways to do it. So I don't know if you're referring to this version of turtle soup where like you just do this. You just like set a limit at the low. I don't do this. I don't do that. I do this. So I will just frame a trade off of this low. Say this is like an hourly time frame. Let's say this candle one hits it, then I want the next candle to distribute. And I look on the lower time frame to catch the move. But yeah, I love the turtle soup or continuation purge, whatever you want to call it. I'm good, freak bow. Do I use open flow? What the hell is that? I don't know what that is. Um, the news candle created SMT on the top of that PA where you were looking for bullish SMT. You ignore it because it was created from. Oh, was that like earlier when I was looking at something else? I don't remember anymore. Where did you learn all this, bro? Market Maker series, the MXM trader. Also, if we have equal lows on it. All right. What did I learn? Like T trades, um, MXM trader, and like just other like just things from random people. Like I even learned stuff from Kiko, Afiz, just a multitude of people. I haven't really learned from ICT though, to be honest. I don't really watch them. But this is all ICT, you know, for sure. It's all ICT. But yeah, I don't know. I would rather. Oh my god, that voice card was crazy. But I would rather spend a bunch of time studying on the actual charts than watching content. I feel like it's just so much content that you don't even need all of that. You don't need all these concepts. I really don't think you do. To actually like, I don't know. I don't think you need all of that stuff to be honest. You can be a lot simpler. Uh, and I think it can you can learn faster learning from other people. Like to be honest, they just simplify it. That's my opinion though. And you can spend that time actually back testing and you know because if you spend all that time, dude, that takes so long to watch the videos, bro. I can't do it. I don't know how you guys do it. I can't do it, bro. Like, dude, that's like hundreds of hours. Like, how do you even backtest and watch this shit? It would take forever, bro. Wild. Also, if we have equal lows on one asset and the other asset instead creates equal lows, you manipulate the low. Wait, what? Also, if have equal lows on one asset on the other asset instead of creating. Oh yeah, we do with the. Yeah, it is SMT. It's just not ideal. But yeah, that is technically SMT. Like if one asset does this, equal lows, the other asset does this. It technically is SMT, but not ideal. Like because SMT is just relative strength. It just means that this asset is technically stronger. But if we create equal lows, like is it even stronger? Really, that much stronger? It technically is, but yeah, it's not ideal, bro. But it does happen. If we barely take out the low like this, example, um, would you still consider that an equal low? Oh, yeah. I mean, that's technically manipulation. Technically, some people have a different opinion, but I think that's yeah. Especially if we CSD off of it. I mean, clearly it's trading away from that area. You have to confirm it though. Yeah, but I think so. Oh yeah, here's the indicator, guys. Oh, nice. He actually has it. That's cool. Yeah, get that. Get that. Hold that account. Yeah. If no one else or Garrett posts this session, I can post it. Oh yeah, I don't care if you post it. I'm not recording. Rewording the question from before. On the monthly chart, there's SMT on the bearish side of the candle. Are you using bullish SMT? disregarding it because counter bias. So are you talking about over here? Are you talking about if we create a bearish SMT? So you're talking about if like if you create an SMT like right here or something? Is that what you mean? Because that would be against trend, but um, it's just as simple as like if this candle creates SMT, then I would need this to happen. For me to even consider this, what do I need to happen? It's the same thing. So this candle creates SMT. I want this candle to reverse price. So it would have to like disrespect some daily order flow and do the same thing. It would have to go up, small opposing run, and distribute lower. But it doesn't do that, right? Make it opposing run down. So it's just about all confirming these ideas with power of three, literally. You confirm everything with power of three. That's why power of three, understanding how candles form, is like, it's so sauce. It's better than anything, in my opinion. Oh, if it's SMT on the top and bottom, yeah, so SMT is just a confluence to an existing bias. So the thing, if it, let's just use this example, right? Would I really care if an SMT was created here? Is this really like a reversal point? No, like this is the reversal point, right? And also, if we change state delivery here, you're gonna have a bunch of random ass SMTs everywhere, and they're almost irrelevant. A lot of them are really irrelevant, and it kind of just comes with experience almost. But yeah, you're gonna have like that shit confused me, dude, like a lot when I was learning. I was like, bro, there's SMTs everywhere. I used to go on a 5 minute and like trade every SMT and get shit on, dude. But yeah, it's just about um, just whatever fits the model, right? So here, we just look. We have this range from high to low. We're disrespecting the 50% of the range. This is the model, right? From going from low to high. Now, are we going to have perfect bullish expansion throughout this whole thing? No. We're going to break down sometimes inside of here. And now we're looking for bullish SMTs in here to continue higher, right? Now, if there's like SMT with a relevant point with the range high, I don't care about anything really inside of here, to be honest. Especially if the daily's still bullish and all that. But if it's S&P with the range high, that's different. That's a lot different. And then we start, expanding lower and then creating bearish SMTs and all that. It's just about order flow. Like, and the thing about reversals is they need to be they need to look a certain way. So if you create a SMT like this, and it's just looking like some shit like this, reversals don't look like that. Right? This is just consolidation, and it's likely just to continue higher. Like it can stall price for sure and get ugly, but if this is going to work, bro, it would look something like this. We're going to create fair value gaps. We're going to respect order flow because that's what through distributions look like. You can even see it, right? Whoops. On the weekly, respecting order flow. On the daily, respecting order flow here, right? I hope that makes sense. But yeah, you're gonna have a bunch of random SMTs, bro. It's just like it's kind of hard to explain. Just like anything, you're gonna have a bunch of TD arrays, but do they all mean you should trade them? No. You know what I'm saying? What is a breakaway gap? How can we know before it? Yeah, so a breakaway gap is like, all right, so if we're gonna frame a trade from this low, so like I was saying, in a distribution, we want to leave in a hurry. Like this is what a true reversal looks like, right? We expand away. Like once we hit the key level, we see we're expanding away. So when we leave price, basically like you see this little fair value gap here. I don't even know if I got touched. So it didn't get touched. So as soon as we leave away, like and distribute away, I don't want to see price come back here because in a distribution, we do not retrace deep, right? Especially if we create order flow. If you're creating new order flow above the fair value gap, we want to see order flow hold. See this fair value gap? I want to see this range It's a fractal range, so if we go to 12 hour or something, right, you have order flow, right? This is why I use the 12-hour and stuff. You can see clean stuff. So you have this range from here to here, and the fair value gap is underneath this range, and I want this range to hold. Right? I want this order block to hold. So I have a PD array protecting this fair value gap. So I wouldn't want to see it fail. This fail, right? And same thing right here. Like this can be another thing. You have this um, this order block here, and what's above it or below it is a fair value gap. And this can get tagged, right? It can get tagged, but as soon as we change state delivery, I want to see this P breakaway gap. That's how I use it, at least. Um, I think who has a good video on it? The OTE trader has a good video on it. But yeah, and you don't want to see deep retracements in these ranges ideally. Like here, we actually kind of do have a deep retracement low key. But you want to see rejection. So like, look, the daily quick rejection. Um, we're still holding that PD array. You want to see PD arrays hold and not deep retracements. So I don't want to see price come all the way down here to OTE. Distribution will expand until the key level or the objective is actually hit. Hopefully that makes sense. So basically, when we leave from a fair value gap in a distribution, then I don't want to see that be tagged, especially if a new PD array is formed above it, because then we'd have to disrespect that PD array. How to use IPTA often? Well, it's every day. I'll show you like, so IPTA is this expansion, right? So you get a new phase of price after expansion, right? There's three things that can happen after expansion, and it's only once we hit a key level. You can use swing points for an example, right? Objective. Once we reach this level, now we can reaccumulate. We can either consolidate. That's one thing we can do. We can retrace, or we can reverse. So if you look here on that monthly time frame, we expand into this key level, and then we reverse. Look on the daily chart. Expansion into reversal, right? This is not a retracement. Take expansion into reversal. Reversal is just like another expansion, basically. And then once we take out a high, right, we can do what? We can retrace back into what? Another key level. And then we can do the same thing. After retracement, we can expand, right? And then you just use like time frame alignment. How do we know when that retracement is over? Well, when's this new monthly open? So the monthly opens here. You want to see the monthly open in a key level or trade into a key level. That's what happens. And you want to see SMT in here, ideally. See what we see. Don't see any. Go on the other asset real quick, just to see. All right, we do have SMT. So you see this little, on like a 12-hour, this is swing point. And you get this SMT at that monthly low. And then this is how you know once we get that change state delivery. Since it's like a monthly power of 3, you can use a 4-hour as well, but I mean, you get it either way. Right, so go to the 4-hour charts. Look, you demand this SMT. Or sorry, I'm looking right here. I think this is SMT. Yeah, so this little SMT here, right? And then we're starting to close over opposing PD arrays, so like failed order blocks, right? And we're using a mess support, rejecting these lows. You get another order block here. And then inside of all this distribution, you're in a daily power of 3, you're in a weekly power of 3, right? What do you want to see? The small opposing runs. So this day, like I said, we created the order block, and the next day we retrace into the order block. I don't want to trade this day bullishly because my rule is I want to the next day, and all I would want to do is see that small opposing run. I want to see if there's SMT anywhere. Where am I at right now? All right, yeah. So y'all see this SMT with the previous day's low, right? And then once we start to displace up on the lower time frames is what I want to trade. And it's the same thing. I want to see displacement on the 1 hour and the 4 hour and stuff. I want to see those PDRA support price higher to form the expansion candle. But I use IPTA like with everything every day. Um, and this is why my model is I can trade counter trend a lot. So you see this day here, we expand into the key level. The next, if we're going to retrace back into the range, it's going to do it the next day. As you see, we do that, right? So hope that makes sense. And then when there's like SMT, so let's see if there is. Yeah, so you have SMT with the previous high. What can I pick this? Yeah, so this SMT here, that's when you can assume that we can trade back into the range. And then once we hit a key level here, which we do, so this is why I use the 12-hour and stuff. Because there is no PD right here on the daily, but if you go to 12-hour, right, you see something, right? You see these opposing candles. And it's the same thing. If this day hit a key level, then I want the next day to expand, right? And I would want to see a small opposing run this day. See how we have a small opposing run to go lower with SMT? So I want to see price once we hit this key level, let's see a small opposing run and expansion away. Now let's see if silver has this SMT. Doesn't have to, but it doesn't, I don't think. That's fine. But yeah. And then once you see this, like it's I more likely a retracement when the weekly profile is aligned. So you have Monday low of the week and we're trading away from it. The low of the week is positioned in a key level, right? And we're leaving equal highs, like these swing points. So a lot of people will think this SMT is like a reversal for the whole week, but note the narrative, We're in expansion. What are we coming from? We're higher time from PDRA, higher time from SMT, right? Look at the small opposing run for the weekly candle. It's really hard to put together when you're new. Uh, you said you would rather spend a ton of time charts when learning from other. Can you do like 5 minutes of practice? Yeah, so I have this video. It should be done, I think. I recorded a video for y'all. Back test. I did like 10 trades, 6 wins, 4 losses, 30 minutes long. It's kind of bullshitting to be honest, but it's kind of weird back testing on here because um, kind of hard to not cheat because if I go to the hourly chart, look, kind of annoying. Is there a setting for this, by the way? So if I go here and I go back to the daily, it's going to show me the whole daily candle print. It's annoying. I need FX replay, but I already got rid of that shit. I spent so much time back testing that I don't even like do it that much anymore. But yeah, I'll share that video with y'all, and I'll record another one if I can, maybe today. Well, I'm just doing a Q&A right now. All the time. Yeah, all the time. Yep. How long have you been trading? I don't know who you're asking. I think you're asking. What it's like to be full time. I'm not even full time right now. I work a job with my friends at this warehouse. Pretty fun. But yeah, I just trade on my phone while I'm at work. I don't trade. I don't work every day though. So I can trade sometimes. Drat hopping on off for about 4 years, including ICT, but wouldn't handle the rants. Seriously, learning ICT content from this Discord. Definitely not. But oh yeah. But yeah, I basically got out of the army. Like a year ago, and then I didn't even know ICT, bro. I wanted to be a day trader, but I was trading supply and demand, and that shit did not work. Like I thought I was gonna learn, and then reality struck, and then yeah, I had to learn something else, and then it took me a while to get ICT. So I'm actually like newer than you guys would think to ICT. Like I haven't been learning ICT that long, bro. Trading is a journey, but yeah, I think by next year I could go full time. Your written boxes are so light in color, Garrett. Oh, my bad. Oh yeah, it is really light right now. I don't know why. There. What am I talking about? I don't even know, bro. What's your model? I went over it yesterday, but it's essentially it's just a key level being hit. So what is a key level? I only use three. It's a order block. Or I'll write it down for you. Well, it's a swing point, swing high and low, which is my favorite. Right. Swing high, low, order block, and fair value gap. That's it. And I just wait for a candle to hit that key level. So let's say this low, right? And we'll divide it into three things here, right? I wait for the candle to hit this key level, and I trade the next candle. So there's only two ways the candle is going to form. Candle one that hits the key level. It's either going to be expansion candle or a reversal candle. The way it closes. So when it's an expansion candle, I frame a trade off of that candle's low. So the sweep of that candle's low. I want to see shallow run because if we go on the charts, every expansion candle you see has a shallow run, a small opposing run, right? Small opposing run, 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 small opposing run. So this is important to understand when you're trading a candle. So this is why I don't trade the first candle that's a key level. For example, let's look at a example here. So just like this one, bro, like if you're going to take a trade, look how far the daily open is. So you cannot expect price to hit this key level, come all the way down here, and then expand the same candle. The candle would be absolutely massive. The wick would be huge. You know what I'm saying? So if we're going to even get a bullish reaction out of this, if we're going to expand, it's going to do the next day. You see? And this is where you're going to have your invalidation points. It's very easy to trade this way because as soon as you come into the market here, you're going to see what's inside of this wick, right? You're going to see how it formed. All right, so let's pull up a correlated asset real quick. So first thing we want to look for is SMT, which we don't have. What do we do have? We have SMT at the highs, which is like no bueno, right? That's no bueno. So play this day out. You could have maybe caught some longs, but now we're forming SMT with the very range high. So this is why it's pretty easy, right? So once you see this the next day, what did this day do? It created SMT, right? So and what did it also do? It also changed the state delivery rate, getting higher resistance at the highs. And then now we're just waiting for this change state delivery essentially. And then what do we want to see? If we're going to be bearish, we want to see a small opposing run, right? And you also have SMT here now, right? So what do you want to see? A small opposing run, ideally. So boom right here. What's the key level, right? We can use, what do you call it? highs and lows. So this high right here, it's Asia highs, and we're also having that daily small opposing run. So this is an MMXM from here to here, right? In line with that daily idea, right? Let me come back up again. Ideally, you'd want to see this be swept or create SMT, but we don't even do that. Let's look at the other one. Okay, yeah, we do have SMT here because that was weird how we just came back up. Maybe I was waiting for news. Damn, there's no news this day. Monday. Yeah, but you get the idea. So if you took a trade here, let's go see if there's an entry. I don't even know if I can go back this. No, I can't. 15-minute. Damn, I can't. I can't go on low time frame. But if you get in, up here or something, you probably get break even, or maybe you take a loss. But once we create this SMT, it's the same thing, right? This candle creates the SMT. So I want to distribute. I want to trade the next candles, right? And the SMT is the key level because it's engaging with a swing point. That makes sense. Yeah. What do I want to see? Small opposing run. Now I'm just waiting for price to engage with something, pretty much. So you're always going to have a model, right? Once the candle closes, like this day right here, if I want to trade long, first of all, I wouldn't want to trade this asset. I want to trade silver. It's way stronger. As you can see, it took out this high, right? It took out this high. It already completed the model. So when this day closes, it creates SMT. It engages with the key level again, as you see, right? This day engages with the key level. So what will the next day do? Expand, right? Is it aligned with the daily profile or the weekly profile? Not really, to be honest. Like you have Monday low over here. You have the low of the week, the high of the week. So this again is going to form a reversal candle. If I go to the weekly chart, oh wait, is that the daily over? Hold on. Oh, that was a new week. My bad. That was a whole new week, so it's completely fine to trade this. The previous week created SMT, so now we can expect the next week to become an expansion candle. Right, as you see, this week here created a key level, so it's the same thing on all time frames. If this week created or hit a key level and created SMT, I want the next week to expand, which it does. What will expansion candles have? Small opposing runs. So that's my model, like simply put, but I have a whole stream on it. Wait, what? No Diddy. Uh, would you still trade if there's not an SMT? Yeah, you can trade if there's no SMT. But ideally you want SMT. You're gonna have a way higher win rate that way. Uh, oh yeah, yeah, I can. Sure. If you guys want this news, it's by 2 degree. Pretty cool. It's just called news by 2 degree, and then you can filter out the impact, high impact news and stuff. And then you can also filter out the pair and stuff like that. And then if you guys want the session indicator as well, it's by EFO. ICT goes on some pivots. It is pretty cool too. I think it has like daily separators. You can have like if you use the midnight open, you can mark that out. You can mark 8:30, 10 a.m., 9:30, all that. Honestly, don't like to do that because it like extends it out too much. I just use it for sessions. Oh, I can't go. But yeah, I just use it for sessions, bro. What days would you see as high probable? Just follow E-Trade's economic calendar protocol. He has it on I think YouTube or AM Trades does or something like that. It's in here. I don't follow it like directly, but again, I just have to have my narrative. Like, if early week hits a key level, then I'll trade it. I don't care. I'm not gonna trade the day prior. Likely, I'm not gonna do that. The day prior to news events. So early week is what you want to trade ideally. Oh, so I'm charting swing highs and lows. Oh, let me read this in the MXM chat. So I'm targeting swing lows and highs at specific time of days. Um, yeah, your targets are swing highs and lows, but I mean, yeah, you're looking at reversal points in a session, like whatever session you're using or trading. So if you trade New York, it's important at what London did. So if London created the low of day, you have that daily small opposing run. Whoops. All right, so let's say this is New York session. So if this is New York session and the low of day is already created, let's say there's a draw liquidity up here, then this now becomes your invalidation point, this order block or this fair value gap. You don't want to see this get disrespected because this should hold this low today. Ideally, you have like SMT and stuff. So all you do is look for entries here at a 1 hour or above key level, and you can use the same model. So um, and you just target this high, right, to draw liquidity. If there is no um, like low of day present, then New York will likely make that. So if Asia and London kind of consolidate, you don't see this that often. If New York creates this opposing run, this is one of my favorite profiles though. This can look multiple different ways, and NQ and gold have the same profile, and that's my favorite. But I'll show you it though. But let's say this is New York session. You just wait for a. It can be any key level. So these swing lows is a key level, right? Because this is manipulation, and then you want to distribute towards these highs. It can also look a lot different. So like, look, if I want to trade a bullish day, right? We open up here, but we just expand, right? So we're expanding away from the daily open. And then if we come back in New York session, take out all the session lows. Let's say this is the daily open. We create a new daily open. So what it's just doing, it's just creating a daily wick. It's just manipulating the daily range. As long as this is small, this opposing run, and there's also like SMT, well, now you have highs to target, right? You have like generated liquidity the same day. You can target it like that. And you can see that on NQ and gold here, right? So we didn't really do anything on Asia and London. It's kind of like whatever, kind of drifted away. There's really no crazy opposing run. You see this small run here above the, it was the high of the day. We're creating a new high of the day, so we're just manipulating the Asia session. We also have S&T here. So see that small opposing run? Now you can basically trade away from this. And because we have this small opposing run is why this works, right? If we had something like this, let's say it was, how do I make this? Daily open right here. Let's say we had a like large opposing run, then we traded away, and we're coming back. I don't want to trade this anymore. This doesn't fit the narrative. That's not what this profile is. You can see it on NQ2, right? Literally the same thing. So we're kind of drifting away from the daily open. We're coming back, manipulating the generated liquidity, right? That the day created. And then we're having that small opposing run. We're creating a new daily wick, but it's still small, right? And then we're using intraday power of threes, right? This 6 a.m. candle manipulated. If I want to the 10 a.m. and 1400 candle to distribute lower. And I want the same thing. I want small opposing run. In this case, it created SMT into order flow. Yeah, that works. And then as well as this one, right? It also does the same thing. It creates SMT into order flow. These highs, you want to trade away from higher resistance, target low resistance. These little failure swings, and then these failure swings. Yeah, it's because I'm at my parents' house, so kind of bored. If a kilo hit with expansion candle, the 1 hour CSD would be far. Oh, I think I know what you mean. Yeah, so you can either drop down. So I know what you mean. So let's say, frick. So you open up something like this and try to make this strawling. So let's say this is expansion candle, like right here, and we hit a key level. All right, so if we're not going to like create a new low, right? If we don't sweep this candle's low, which we don't have to, the model doesn't require that. It doesn't sweep the previous candle's low and then create that small opposing run and CSD. Sometimes it's gonna look like this. We're gonna open up like right here. Wait, I don't know, let me redraw that. We're gonna up like right here, and then this like CSD is like super far away or something. Then this is where you can drop down to either like the 30-minute, use a something like that. Um, or yeah, you can just use an inverse fair value gap. But this just confirms the reversal. You would still need to wait to hit a key level. So if we form a low inside this inverse fair value gap, if we create SMT with this low, that's an opportunity. If we sweep it, we sweep this low, that's an opportunity. Ideally with the SMT, that's an opportunity. And then obviously if we break here, create a fair value gap and CSD, this is another opportunity. So hopefully that answers your question. But yeah, you can drop time frames. How long have I been streaming? I don't even know. When did I start? Not that long ago, right? It doesn't feel that long ago. Yesterday was crazy long. It's like 3 hours. Where do you enter trade on small opposing run? Yeah, I'll show you. It's going to be into order flow, so I'll show you this. What the hell? All right, so same thing on same model, right? This candle hit the key level. So this is manipulation, right? And it also is in confluence with that small opposing run to create the expansion candle. So I want to trade the following candles, just like the daily, right? Just like the daily, towards these failure swings. Um, and then I want to see small opposing runs on the hourly candles as well. So if you go to 3 minute, to 5 minute, whatever, I guess I deleted it, but there's SMT here, right? Let's draw out the hourly opens. So this is the previous candle, right? And all I need to see, first I need time frame alignment. So I would need a, what do they call it? A CSD, right? So now this is my new invalidation level. So now this is really good when you have this because for the hourly to even go bullish, it has to disrespect order flow, right? Now it has to. So now you kind of have like a resistance level. And you already had that opposing run here, right? That small opposing run. And then we create an invalidation level. And then we also create SMT. So this is an opportunity again for propulsion block. And you would have probably got stopped out here, let's be real. If you entered off this, because it's like equal highs. Unless you add spread. I mean, uh, I think spreads are pretty high on gold, so you probably want to do that. Let's say you got stopped out there. That's cool. There's another opportunity. There's plenty of opportunities. So there's opportunity here for one off of this, you know, CSD lower sell, and then you get this SMT throughout the another the 10 a.m. open right here. So again, it's just a small opposing run into order flow, and ideally, there's SMT protecting these highs, right? So price would literally have to go open high, disrespecting protected highs, SMT highs and stuff, and basically disrespecting order flow and stuff. There's a way that T-Trades does it, but I'm not going to say it because that's in its course. But if you know, then you know. But basically, we make that small opposing run. It's just like the daily time frame. When you make this small opposing run and expand away, right, creating that invalidation level, it's highly likely that it's going to be an expansion candle. And the farther it trades away from the open, the more likely it's going to be a bearish candle, and obviously not a bullish candle because that would create a huge wick against order flow, against the manipulation, and all that. Hopefully that makes sense. And then where is this? And then once we reach these objectives, I don't care anymore. Like, I don't care to trade because we usually just like mess around. So I'm not entering anything over here. I'm not entering this fair value gap. I'm not entering this fair value gap. I want to enter up here. If you draw a fib from this low, basically your target to the reversal point. Ideally, I want to get it around in the premium end of it or around the EQ, not really down here, you know. And you can use SMT all inside of the distribution for protected highs and stuff. I didn't upload it, but someone did. It's in here actually. You scroll up, you can find it. I'm not recording this one either. Someone might be, but that's the first thing. Sometimes that's the thing. Sometimes even on 30-minute. Yeah, you can use inverse, bro. Especially if there's SMT, dude. If there's SMT, you could definitely use inverse. But yeah, bro, I would use SMT with like everything. If you want to filter out trades, just use SMT. Like that's as simple as it can get because there's no downside to it really. There's literally plenty of opportunities, bro. There's so many opportunities every week. Like you might as well only trade the good ones. How do we master psychology? I'm probably not a psychology master or nothing, but I would say you need to have data behind your model in order to trust it. If you don't have data behind your model, you have a ton of psychology issues because you can't trust it. You haven't seen it work. You haven't proven to yourself that that model actually works. You just need like experience, bro. Just like a lot of experience. And I think technicals are a big thing because the better you are as a trader, like technically, the more you know what to avoid. Um, basically, like the worse trader you are, the worse your psychology is going to be. Just being honest, like what I'm saying. If you're a shit trader, okay, not a shit trader, but you don't really know what you're doing. Like I see a lot of people blaming it on like their psychology, but they're just not. They're not there yet as a trader, like technically, you know. And obviously, they're going to be bad. They're going to take more losses, and yeah, like basically, the better trader you are, the more wins you're going to take, the easier you're going to be on psychology, bro. And that just you're just going to have to study and build an edge, and yeah, get data behind it for sure. Uh, how do we master SMT? Yeah, you're only gonna use SMT um, in reversal points. So here's another thing, guys. If an SMT is against the power of three candle that you're trading, that is likely to be fake. So what I mean by that is if this is an expansion candle In any SMT like this, right, we already know that it's less likely to reverse than it is to continue, right? So this can create a pullback, but not likely to reverse price. Um, that's one other thing because it's against the order flow. It's against the expectation, the model, you know. So I showed this example on. Let's look for another one. Let's just keep finding another ones. Let's show you a monthly example. I already showed this one. We can even look on a silver here. We have this opposing candle, right? That last month hit, and we also have SMT with the previous candle. So the previous candle, this one, manipulated the other candle, but it's also SMT into a key level. So this is when you expect this candle to do what? Open, low, high close. So any SMT, basically, let's go look for some. There's going to be some somewhere probably. And also go ahead and draw that. So we open up here, right? Right here. All right. Okay, so look at this SMT. So why do we trust this SMT here? Because of that expectation. We expect that distribution. When you get this SMT at the low of the month, right? And then we change state delivery and all that, right? Does this align with the weekly profile? Yes. We have the Monday low of the week. So when we're trading away from not only the monthly open, but the weekly open, I'm sure there's going to be SMT in here. Hold on. Let me try to find some. Okay, I actually can't find any. Oh, yeah, I can actually. So this candle right here, this candle creates SMT. So how do we confirm it? For one, what is it against? It's against the weekly profile. So if I go to the weekly time frame, let's go look at the weekly chart. Oh, I can't. Hold on. We'll just look at on. These are both expansion candles. So it looks like this at the current time. Do you really think price is going to do this and create a giant ass wick against that order flow, against that SMT manipulation, right? And look at the range. We're disrespecting the premium end of this range from high to low with manipulation at the low of the range, right? We're already CSDing. So this is already against order flow because we already switched order flow, right? So all you would need to do is that small opposing run, which you do get, is as simple as that. And it's like the same thing on the daily. Any like SMT when we start trading away from the daily open is like almost fake. So that's what I mean by not only when it's against your model, but also the power of three. So this is just it's almost like an internal to external, pretty much. You just have this range from high to low. We have manipulation in the discount, so we expect external to be hit. So it's against the model, but also the power of threes. Hopefully that makes sense, bro. What is power of three? It's just open, low, high, close. What is SMT used for? To confirm reversal, to confirm a key level. Yeah, power of three is just open, high, low, close, the formation of a bullish expansion candle, bearish expansion candle. And expansion candles, we open up. We're going to do a bearish one. We want an open high, right? And you want this to be small. You want this to be a small opposing run. And you want to distribute away. And then want to close. So open, high, low, close. If you look at expansion candles, right, they all have, you look at these two bearish expansion candles, they have small upper wicks. You look at these bullish, uh, these large bullish expansion candles, they have small opposing wicks. And if you look here, how do we know when to expect these? It's IPTA. So they go hand in hand, right? We have manipulation. This candle manipulates. So what I want the next candle to do, distribute, because that's what happens after manipulation. How do you confirm manipulation? SMT. So it's SMT here. I already went over this earlier. But yeah, does that make sense, kind of? Kind of. This is what I mean. Okay, so yeah, you want the next day, small opposing run. Do we get that? Yep, small opposing run. Oh yeah, you can use intraday. Yeah, this is fine, bro. And this SMT here, what really matters, bro, is this small opposing run. I'm not gonna lie. This small opposing run is everything. Like, yeah, I'm definitely not gonna wait for that. You're gonna miss the whole move. But yeah, this intraday reversal, or sorry, whatever you call it, CST and whatnot, and especially this SMT is what you want to trade. What does this guy ask? Uh, if you want to start your day, how do you find your bias and draw liquidity from weekly to 4 hour to 1 hour? So forget the 4 hour, the 1 hour. That's all intraday stuff. CRT model. Oh yeah, it's not CRT, but it's like the next day model kind of. It's just simple as this. So come into the charts. Um, and ideally I want to see what the previous week did, and if it hit a key level or if it's coming from a key level, then that's an idea, right? If we hit a previous week, hit a key level, then it's like the same thing, right? I want to see the next week open low into this is an expansion candle. That's my rule. I want to see reversal off the candle's low. Ideally, it doesn't have to happen, but I need to have a small opposing run. Like that has to happen because I want to trade expansion candles on all time frames, and then I need to see right the open low. Then I need to see distribution away, and then this is when you use weekly profiles. What is the low of the week here? Is it a Monday, Tuesday? Ideally, uh, right? And then it's just about after that, it's just about the daily candles. So now in a weekly profile, a weekly expansion candle, you're gonna have daily expansions. Right. So this is a Monday right here. Oh, sorry, I'm tripping. Let's just go over here. Let's look at this example actually. So what did this previous week do? It hit this key level, right? So what I want to see the next week do, expand, and I want that small opposing run. Right. So let's go look at the days here. So we have that small opposing run, right? We have Monday, Tuesday, Wednesday, Thursday, Friday. You see how most of them are expansion candles and they all have small wicks, right? All have small wicks. Now this one here, like you're not going to have expansion candles every day, but this is why you confirm it. Right? This is why you want to see these daily profiles and small opposing runs to confirm these things. So once you have a narrative, all it's about is the distribution away from that key level, right? So this is SMT here. I already remember. So if this candle created SMT, right, and then this is the Monday, the new week open, I want to see this candle distribute. I want to see all of these candles distribute higher, right, into this here, pretty much. And it's the same thing for the daily chart. So if I go to this day right here, over here, clear this up. All right, I'm not going to trade this candle that hit this fair value gap. I want to trade the next candle. And I ideally want this to be a small opposing run. See how it's not really a small opposing run? That's relatively large. Then this is why this creates a reversal candle. No, it doesn't mean you can't catch. Doesn't mean you can't catch a trade in here long. But then since this is not an expansion candle, the next day will expand. You know what I'm saying? And my rule is I want to see price reverse in the first two candles. So if candle two is not going to reverse, this is now my protected low. I can't freaking this thing. So this becomes a candle two, like just like the next day model. and then I want to see expansion. So sometimes it's going to form a reversal candle. Sometimes it's going to be an expansion into reversal. So let's show you an example of that. It's like this. So we hit this key level. So note the difference between a candle two. So this is a reversal candle two. This is a reversal into expansion candle two. Note the difference in wick size. Large wick, small wick. This is why I demand a small wick. Hopefully that makes sense. And yeah, I just wait for the previous day to hit the key level. Now, I don't have to have that happen. If you just want to trade a random day, have a draw on liquidity. Kind of like rolled my R there. That's funny. And demand a small opposing run. We make that, then you're gonna have key levels inside of here now. You might have a swing low right here. Oh, let me redo this shit. All right, have a draw on liquidity. So maybe this high. Have the weekly profile ideally on your side, right? Have an open low. So you can already be a buyer when we dip below here, especially, bro, if there's SMT. If this is London session or something, you can already buy this. I don't need a CSD. You can already buy this, right? Below the opening price. Right? That's what ICT teaches, I'm pretty sure. I don't know. But you can just buy here, or you can wait for the CSD expansion away from the daily open. So now you can trust this to be the low of the day. Um, so you have like two options. You can either trade in anticipation of this being the low of the day, or you can wait for extra confirmation. So you have a chain of state delivery now, and now you have key levels. So you're gonna have uh, like a swing low. So maybe we generate a swing low, and then we purge that low. You can buy this low, right? You can have S&T year two as well, right? So there you go. Or a simple internal to external range. So maybe a fair value gap rate like this. So just internal to external that's aligned with this strong liquidity. So something like that. It's going to look different every day, but it's all the same. Just fair value gaps, highs and lows. My favorite is highs and lows. Even in internal range to external range, you can have SMT like this, and this is the highest probability version of internal to external. And even in your intraday expansions, you're going to have 4-hour open, high, low closes that you want to be in line with, as well as the daily. But when those are all aligned, you get one-sided expansions. Am I gonna trade Monday? Well, let's see. Okay, so this candle here hit the key level. Now let's look at the hourly. Do we have a chain of state delivery? Yes. So it's as simple as, bro, I do not want price to disrespect this key level. It's as simple as that. I want to see the low of the day be formed inside of here and expansion away towards these highs here. It's really that simple. So I'll check this out. But if we do some shit like this, small opposing run up, higher resistance inside of this fair value gap with like SMT or SMT, and we start to disrespect this fair value gap, you can just trade the other way. Like it's pretty simple. But that's for gold. We're literally just rocketing. It's kind of crazy. What about put oil and then NQ? Okay, so yeah, this was an anticipation. So like almost all these weeks, these last 3 weeks here, actually all 4 of these weeks were all anticipatable. Why? Let's go look. I traded a lot of this stuff in here. These longs, I traded all of them. What the hell? Here we go. Whoops. Right. So let's look here. You have so this candle here. What did it do? Manipulated, right? If you look at an RB, it actually hit a key level. So once you see price start disrespecting this wick, really, we're not disrespecting the half of it. We're getting pretty close, but all you have to do, like, it's really simple. So does it look very bullish to you? Not really. But we're starting to disrespect this fair value gap, right? We already did. And on a lower time frame, this little move up is a key level. So on the 4 hour, there's going to be, an order block, a fair value gap. So if we're going to be bearish, what do you want to see for the weekly candle? Open high, small opposing run, low close. If you're going to be uh, bullish, you'd want to see, really an SMT probably because it's not really too much of a relevant level around here. Maybe want to generate one. Maybe generate something, run that low out, form some SMT and go higher. But we see this. Bruh. See Monday, create that opposing run up, that small opposing run. So go here, put on your session indicator. Whoops. Wait, where's it at? Oh, did I delete that shit on accident? No way. Fuck. Damn, I gotta go do that and put all the settings in again, dude. How do I do an indicator again? Right here? No. I'll do it later. That's tough. But yeah, you see the high of the day is formed in London session. So that's a good thing to look for, right? And then also at the high of the day, what do we have? SMT. So it's as simple as that, bro. Small opposing run, SMT, and you say delivery, right? What do you have at the lows? This is literally a market maker model. Original consolidation here, manipulation, distribution, right? Fair value gap, redistribution, you know? And as you see this giant ass candle, now you absolutely know that this has to be a weekly expansion candle because to the downside, because look how far we ran. If this is going to be a bullish weekly candle, we'd make a small opposing run up and make a distribution higher. So it's as simple as that, right? So there's the idea. And then go to the weekly time from here. We expand, we basically close, and we form SMT, right? So you see this candle here. Where is it at, actually? Wait, where was the SMT at? Try to find it. It's just somewhere. Oh, it's right here. So this SMT here, right? And then I would want to see a reversal, a small opposing run off of this swing low. But as you see, we don't have this small opposing run, which doesn't mean you can't trade long because this is what I did. You have Monday, right? Just trading higher. And it's like the same thing, bro. So almost all these days are anticipatable. It's kind of crazy. So you have this key level being hit, swing low. The next day, if we're going to retrace, if we're going to reverse, it's going to do the next day. As you see, small opposing run back into the range. If I go into like the 12-hour chart, you're going to see something probably, right? You're going to have like a key level. Now, do we hit this? Yes. So if we're going to trade away from this level, as you see, this is just a consolidation, like from high to low. You have this inside bar, right? Creating failure swings on both sides. And if you're going to trade away from this level on the first candle, it needs to have the small opposing run, right? To be an expansion candle, as you see, right? So it's the same thing. We hit another key level. And with the idea of wanting to trade back into the range on a, what do you call it? If we want to create like a bullish expansion candle, that is no longer a thing. We can't really do that. Um, so like your expectation cannot be this high anymore. So now we understand that this can't be a bullish expansion candle, it can only be an indecision candle. So you want to target stuff slightly above the weekly open, so like this swing point high, right? So I traded almost all these days. So this day, it's the same thing here, right? Expansion, right? Retracement, expansion into a key level. This is the key level here. The next day we will have that new phase in price. And as you see this next day, or sorry, this day here, we actually create SMT. There's that delayed New York protraction profile. We have that small opposing run. We make the run away, and then we dig below the daily open one more time, creating that small opposing run still, and also SMT. So now this is a trusted low of the week. So now we can expect expansion throughout the, well, not anymore, because look, only this day we can really expect expansion because now we're moving above the weekly open, as you see. This is the weekly open here. So I actually traded this short back into the range because I know that this cannot be a weekly expansion candle. We are not likely to expand this day. And I traded short back into internal range of this candle. I don't know if you guys some of you guys remember this, but this is the key level being hit right here. And as you see, we close like this, bearishly. And I'm framing my model right off this 8-hour internal. So this candle hit the key level, right? And I want to frame, it's the same thing, bro. This candle is expansion candle into a key level, being this reversal candle. And I want to trade the next candle, which is just the 10 a.m. 4-hour candle, but it's also an 8-hour candle. And I want to see a small opposing run. Open high, low close, back into the range. And if you look at the way this candle formed, right? It's not going to be a bearish expansion candle because of the way we're creating a pretty large what do you call it? Opposing run, right? Pretty large. So all I targeted was this 8-hour internal, right? So the way the candles form also dictates where targets, which target's going to be hit. If it's a daily expansion candle, you can expect farther targets to get hit. If it's going to be an indecision candle, as you see it is, right? You gotta go for like more low hanging fruit stuff, near the daily open, a little bit past the daily open, right? So yeah, I traded this. Basically after this manipulation, I traded this expansion. It was very clean. So almost all these days are anticipatable, quite literally, right? Key level being hit, new phase in price retracement, right? You have this key level, small opposing run. Once we start to CSD, you can trade to this low, right? It's just expansion, retracement, expansion, and then we expand again, right? We create SMT this day. So again, we're expanding to the new daily low, or sorry, objective again, just like over here. And a new phase of price again with SMT here. So if this previous day created SMT, if the previous weekly candle created SMT, then we can also expect that new phase of price on the weekly chart. So this is why we're more leaning towards bullish, right? And then we have the SMT at the low of the week. And because of the way the weekly candle is forming, we know we can't expand this week. We're going to do it the next week. So what did this day do? It retraced into the down close candle. So now we have the daily flipping to bullish. So if this day hit the key level, what will the next day do? Expand, right? We traded all this. It was like a few weeks ago. A couple of us caught this. So what's at the low of the day? SMT, small opposing run. You guys see that? It's literally as simple as that, right? Same thing until we reach these failure swings and this bullish or bearish fair value gap, right? Small opposing run, go on the hourly chart. You're going to see the same things over and over, right? What time is the low today created? London session. Where do we want to see? We ideally want to see SMT, but phase and price, right? This is where we use phases of price. So we have accumulation. So why do we have accumulation? We took out this high. Once you take out this high, new phase and price, it's towards the end of the day. So that's why we consolidate. And it's also at the start of the day. So consolidation, manipulation at a key time, right? Then we can distribute. Ideally, you have SMT, but there is none until here, right? So this is even more higher confluence to go along. You see that small opposing run? It's not small, but um, it's not very large, right? And it's also like we can't reverse from a consolidation. So knowing that, then there you go, right? Plus right, you have this reversal candle put in, so we expect price to come back into the range, and the daily order flow is bullish, right? Hopefully that makes sense. So a lot of these days you can anticipate, not every day, of course. Oh, AM is live right now. Mm, any tips on anticipation? Yeah, it's just from a key level. You want to look for SMT. I am being wrong more often on 1 hour. Yeah, that's because you want so you always want to have an anticipation of the daily candle, and then it's about looking at the hourly and the 4 hour. If you don't know where the daily candle is going, you shouldn't be trading, as well as the weekly candle. To be honest, we're going to learn more about the next day model, T trades, the MXM trader. I use it differently though, a little bit differently. So this is the next day model though. It's when you hit a key level and you form a reversal candle. Uh, so let's try to find that. Like this. So you see this key level, this swing point high, and then this candle is a reversal candle. So you trade the next day. So now I do that, but I trade this day too as well. I trade the reversal candle, but I only trade reversal into expansion candles, like I said. So once we sweep the high, once I see that small opposing run, then I can, take that trade, and then I'll trade the next day as well. The next day model is only trading candle 3 and 4 to the objective. So try to find another example of that for you. Um, this is technically one. You have this reversal candle. You want to trade the next candle lower. Um, and it does go lower, but kind of sweeps the high again. Try to find like another one. Look for some fair value gaps. Damn it, I don't see. A lot of people go wrong and they try to look for every single um, reversal candle. So this is really the next day model, like kinda. So it's pretty much, let's just go like any random day, and you're gonna see it's not gonna work a lot of the time. That's because it's not supposed to be used this way. So just like this, see how it failed to close over the previous high? It's taught to target this low the next day. As you see, it doesn't work. It's not gonna work a lot because we're just chopping. Like you can't use it every single day, right? So this day we failed to close over the previous high, so you target the previous low. Like this is gonna work a lot of times. Um, like this, probably gonna hit it, right? And now you just target the previous day's high. DRT is like you target this candle's high, but I don't see the point in this, like targeting the previous high, because like what good does that do you? Gonna get hit like the first hour, bro. Oh, my draw liquidity is taken. What do I do? You know what I'm saying? Doesn't really like do anything for you, to be honest. And there's also this. So if you close over the previous high, whoops, then you target the next previous high, so on and so forth. That's also you're gonna see in the video. It's like this. You just keep targeting previous highs and lows. It's like good for like short-term bias, but you don't want to use it every day, to be honest. You can use it on any time frame though, but I use it a bit differently. How to use SMT to determine false breakouts. So you mean like this? I'm gonna draw something for you. like this, like a false breakout here. That Nagasaga? Yeah, okay. Yeah, this is my favorite type of trade right here, or type of um model. It's when you're bullish order flow, right? You expect fair value gaps to hold. You expect opposing candles to support price. So when we disrespect this any PDR inside of here, obviously the range is going to fail. But once you take out the range low, we can actually frame trades off of lows, right? Because we in a bullish order flow, you reject lows. You reject lows and displace through highs. Reject low and displace through highs. So this is just manipulation, right? You target the range high. So manipulation of the range low, target the range high. And when there's SMT like this, when it's in combination, this is how you know that this is likely going to be a false breakout, if you want to call that, you know. So like that. So if I go to, you can use even that previous day's highs and lows. You can use SMT, any reversal point. So let's just go to gold. I'll show you this. I already showed this, but multiple times. Actually, better yet, let's show you this. So you see this break right here, the lows? We have SMT here. So the same thing basically I told you, where we fail to close underneath the range low, and we also have SMT there. So you target the range high. You basically have bias for the next couple of days towards all these feather swings. And then what did the previous month do? If you look here, this is why you also use narrative with this. So the previous monthly candle also created SMT and hit this order block. Right, so manipulation with SMT. SMT confirms manipulation. You can also see the false breakout here, I guess you could say, right, and whatnot, right, into a key level, which is important. And then we expect the next month to expand. So if you look here, what do we expect? An open, low, high close. When we get that SMT at the monthly low, this is at the monthly candle low. When we already expect an open low, high close, then that's very like significant. You know, that's how you know it's going to
My name is
actually
Cross
be a fake
Boosting.
breakout.
When I hear my own voice, I get horny, so
When
does
Facebook is
work.
crazy. When's Kiko's? I think T-Trade is going to do it eventually. No way he did it today. Where? Ain't no way, boy. On Twitter? I'm looking it up right now. Let me look up aim trades right now. There's no way, bro. What shit he did? What? Bro, I did not think you looked at that. Yeah, I actually saw on his Twitter just now. That's wild. He posted on YouTube? What did he post on YouTube? New video? um, yeah, I'm gonna post this back to his session though. I recorded two. But I recorded one without sound because my little brother was downstairs with me watching TV, so he's just gonna hear background noise, so I just muted it. Don't know if I'm gonna post that one, but I can post the one with my commentary on it. I did 10 trades. Probably wasn't like the best like commentary because I was kind of getting lazy, but I think I won like 6 out of 10 trades. It's also good to just see that you don't need to win every trade. I traded consecutive days. Like I think I traded like I don't know if it was 2 weeks or something. I don't really remember, but I traded like every single day. I was looking for a trade every day, but you're gonna have a lower win rate. So yeah, please do both. All right, I might. I might. I might. Yeah, if you guys don't got any more questions, I'll probably hop off. In the chat. So, oh, he put okay. How this weekly approach forces high probably trade. I'm gonna watch that. Y'all should watch all of AM Trade's videos. They're hella good. So with important key levels, how do I combine that with time and price? So you want the key level to be hit at a specific time, ideally. Like let's say we have a daily open here, right? We're kind of trading away from the daily open or whatnot, right? Kind of just bullshitting. And then if 9:30 opens here, we have that opposing run into a key level, so just manipulation of a low. And we also have that small opposing run with like SMT. Then you can frame your trade on the lower time frames when we start to break higher. You can target these highs. And you can use a projection for higher time frame targets and whatever. And you can look to enter either on the first stage, or sorry, low risk buy or first stage distribution. So something like this. And then you have the second stage, it's reaccumulation. And then, like I said, inside of here, you're gonna have hourly, you're gonna have 4-hour candles, and this is where like high probability trades really fall in line. When you're really in line with not only the daily expansion candle, but also these lower time frame candles. Because if you're going to trade, for example, let's say an hourly range, okay, and a 4-hour candle opens here, way up here, right? Let's say we trade all the way down here, we create SMT in this 4-hour range. It is not likely to reverse this 4-hour candle. The next candle it will. So we might just like bullshit for a little bit. Now the low risk, like the chance to deliver might happen this candle, but I don't want to like get in on this candle because let's say it opens right here, bro. It's a new 4-hour candle. It's likely to just like bullshit and then either resweep because what is this gonna be? This is gonna form an expansion candle. So if it forms an expansion candle, it's likely to sweep the low, right? So this is why I want to wait. That's why I want to wait. Um, Now, if it doesn't, let's say we open up, make a small opposing run, then we CSD, have SMT here and stuff. It can look so many ways. Like, it can look this way too. Like, we CSD here, and then it's still expansion candle, but kind of has a wick, but it'll also have that chain of state delivery. It can look multiple ways. I can just wait until we make it a wick here. Gonna create a down movement, right? You can wait for another chain of state delivery,
So basically,
right, to go higher.
my
You
time
can wait for
is
SMT if there is none.
the
A
monitors
bunch of
at
different
work
things you can
because I
do.
have the east man screen.
But yeah, ideally you want to have
Um,
because
to
now
clarify
I
my
am in
setup,
line with an
my
expansion
second
candle.
monitor
This
used to be
no, I
on
was
my
not.
left.
Now I am.
Now it's on my
I have
right.
the small
I don't know.
opposing
I think
run.
it looks nice, man.
Now this can be expansion candle. Like this candle right here manipulated. This candle will distribute. I hope that makes sense. But yeah, because if you're gonna trade this candle, you're essentially like anticipating that it's gonna form a reversal candle. Like you're like you're like fighting against that
What's your
candle.
problem,
So
man?
basically,
I don't know.
it opened up
What's up?
high, low
What
into
do
a
you
key
need?
level.
Why are you
You're
mad?
basically trading against this candle,
Why are you
right?
shark or
You're
something? I
basically
don't know.
trying to anticipate that it is going to form a giant wick when it closes here, which is not ideal. Now, there's ways to do it, like if um, we create high resistance in SMT specifically, then that's fine. You just need like more confirmation if you can do this. But if it's gonna close like this, bro, it's gonna create that expansion candle, and we could definitely sweep that low out. And right here, instead of here, you could already have that chain of state delivery. It's just a fake out, you know. So once you have the small opposing run, sweeping this low, and then get the chain of state delivery. Well, now this 4 hour candle
Hey,
here
so basically I'm looking
has
at
the
the
small
charts right
opposing
now,
run.
and
Now we can
I
distribute,
think NQ's pretty like
kind of like that.
bearish. I don't know. What do y'all
Hope that makes
think?
sense. Where we at here? Hmm. Osaka is, yeah, pretty much. Yeah, he catches like really large ranges. Also, what's your analysis of indices? So I think indices could come down into this fair value gap. Means delete everything. Whoops. So you see this, we purge this high right into this key level. Now I don't expect a reversal off of this completely. I think it's going to do something like this. At this key level, and then the next week we could expand away from it. But I'm looking to trade kind of like an external range back to internal range here, pretty much. Depending how this week forms, because it could do two things. It could run really deep into here. Does that, then I'm not looking to go long this week. It does something like this, small opposing run, maybe SMT with this PD array, and then we get expansion back. Then I'll trade higher. It's just how it forms this weekly candle. And if you look here, go on the lower time frame. Whoops, I'm drawing all over the place. We have high resistance, so I don't really. If I'm bearish, I don't want to see this being disrespected, honestly, because we shouldn't. This is high resistance now, right? I want to see all these lows get taken, basically. I want to see an open high. It can take out this little swing point if it wants to. I want to see an open high, either into this opposing candle, or this high, or something like this. It could do multiple things. It could consolidate, sweep a little high that it generated the same day, and then distribute lower. But yeah, that's what I would want to see. I just want to see that fair value gap get tagged, and then go from there. What was your other question? What are daily profiles? Daily profiles are just daily profiles are about like what time a closing run happened usually. So like we want to trade an expansion candle, and daily profiles just confirm like a power of three. So it's the same thing. You want to see a small opposing run, and it's just about what time that happened. So if this happened in London session, then we expect this to be the low today because the small opposing run already happened, and it happened at a key time. If it came into a key level as well, then yeah, this would be a classic buy day where we expect New York to retrace and continue. Now, if this happens in New York, this is like a New York reversal. That's what we saw in NQ. Right, so in New York session around 8:30, we purge this high, right? So you have London lows down here, haven't really touched a key level. And so if you look at the daily profile, right, you have that small wick. So basically, New York is creating that wick, that small opposing wick. So New York engaged the key level. Now we expect New York to create the high today and then distribute. And like I said, in distribution, intraday, you're going to have 4 hour power of threes where we have the open, high, low close of these candles. And then you want to see the small opposing runs with SMT. I went over this a couple times. You have SMT here into order flow. And there's also SMT here on the 1400 open. This sweeping highs. But yeah. Yeah, I think so. Yeah, that could be a possibility, London, for sure. I don't really trade London, 'cause it's really freaking early in the morning for me. It's like 2 AM. It's actually 1 AM, I think. Yeah, 1 AM, and I'm just not up at that time. Do I do one-on-ones? No, I don't. I don't do courses or nothing like that. What is your smart bias bearish? FX usually Asia session makes. Yeah, exactly. Yeah, if you're a forex trader, yeah, Asia can be higher today a lot. And it's just about hitting a relevant level at a certain time. Like, if it's like a depending on the pair, because all pairs have their tendencies. Like they're all going to, have these models, external range, internal range, but it's just a factor of time. All pairs move at different times. Um, Indices is going to be that New York session around 8:30, 9:30. Forex, it can be the London session, um, even Asia, bro. Honestly, like almost all the sessions, low key. But it's just like what time did that main move happen? So if we create the low of the day on Asia, then I expect London to create the majority of the daily range. If London create the low of the day and did not expand yet, then I expect New York to do it. Now, if we manipulate in London and expand, I don't really expect, depending on how big the expansion is, I don't expect New York to do much. Now, if it does something like this, it expands without hitting the draw on liquidity, I expect New York to finish that move off. But if London closes right here with hitting the draw on liquidity, then you don't want to trade New York because there's nothing to. For one, a new phase in price is going to occur. We're going to consolidate or retrace, and you don't want to trade that. You can trade expansions. So if you go look at the charts, let's go look at like some forex stuff. Oh, I forgot, dude. I don't have this indicator. How do I get it? Here it is. What is it? 2 degree? Or no, is it TFL? It was like ICT, fill zones, and pip. Yeah, yeah. What the fuck? It's not this, is it? Oh, I gotta redo this whole thing, bro. It's disgusting. Hold on. I don't want any labels, buddy. I gotta turn that shit off. White. There you go. Drawing cutoff time. I don't even know. Asia. Are these at least the right kill zone? Yeah, they are. Cool. All right, that's fine. Need to change the New York one though. 8:30. Fine. This seems to be orange. Oh, that's the outside. I gotta change these colors. These are fucking gross. I think that's it. And then yeah, this is annoying. Sorry. Dude, how do I change the color? This is nasty. Whatever, dude. I guess this is it's gonna be kind of weird to get used to. But okay, so like right here, Asia and London expanded and hit the key level basically. So there's nothing to trade in New York, right? There's absolutely nothing to trade in New York. Try to look at it again. Same thing again. Asia and London expansion, nothing to trade in New York. Um, Here though, so Asia creates the high of the day. You want to trade London lower, right? Try to look for a New York one though. Bruh. You guys know how to do this? Like, why is it this color? Oh, never mind. I want this to be orange. Okay. I want this to be blue. And I want this to be green. Because I'm so used to these colors. Alright, this is fine, I guess. Even though the transparency is disgusting. The opacity. Alright. Alright. Also I need to do something else. Let's make it a lot higher. Alright. Okay, so look here. I didn't really do anything in Asia and London. We just kind of consolidated. So once you purge this high, depending on what the bias is, I don't know what the bias is, but we can actually trade this reversal here. If everything aligns, like if it's SMT, I don't know if there is. This is the most disgusting PA of all time. Trying to find a good example. Okay, so like, okay, if you see this expansion, that's what I was kind of looking for. If the previous session expands, I don't want to trade London, right? Because a new phase of price is going to occur, right? We're going to retrace the next session. And then if you want to trade long again, which there's really no point because look, you're in the premium end of the daily candle, but you can target this high. Right? Anything past is kind of being greedy, honestly. But as you see, the next session expands. Try to find some more examples, but okay, here we go. If London expands again, where are we at when we open a New York session at 7 a.m.? We're literally at the very end of the daily candle. So I am not looking to trade this day because if this session expands, what are we going to do this session? Retrace. Hopefully that makes sense. Again, Asia session expansion, London session consolidation, kind of. And again, you're at the discounted end of that daily expansion candle. You want to see this. You want to see price come back into this level here. And then target lower. You don't want to enter down here. Here, so let's look here. So we make the high today, we purge the previous high, create high resistance, and then we're expanding lower, right? This is when you actually can, target. You can trade New York because we haven't really hit anything to the left, right? We're going to target liquidity to the left, so the previous stays low over here. So once we purge this, this is when you want to start trading. But yeah, this PA is like disgusting. But yeah, this is classic sell day. It's when Asia session doesn't really do anything. Right? We purge the session highs, creating the higher day likely. If there's like S&P here, right? And then you trade lower. You trade this expansion lower in that session. Here's another example. Asia expansion. I wouldn't be looking to trade London. Right? Likely to consolidate. Right? It's just like a little rule you can use. But it's like if thens, like a bunch of if thens. Oh, this is 3 hours already? Ain't no way, boy. I'm cooked. Did I hop off? Damn. Asia expand. Yeah, bro, it can happen. And some of these weird ass pairs it can actually happen. Especially like JPY pairs, I'm pretty sure. But London session is like I feel like the best session for because we want to trade expansion candles, and most of the time the expansion happens in London session. Usually, I feel like maybe that's a lie. I don't know. I don't really trade forex, so. But yeah, like I would not trade New York after London did this shit. You know. Mm, 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 mm. Man, I need to fix this. This is really ugly. How do I fix it? It's literally at fucking 0. Why is it so bright? It's gonna bother me, bro. All right, I'm probably gonna hop off the guys. EU analysis, sure. Can you show this on NQ for these sessions on NQ? Or the my top down or bias? I think I already did that. All right, you have the two sessions consolidating between this range from high to low. Or if they didn't do jack shit, then we want to manipulate in New York. And as you see, the daily candle has that small opposing run. But yeah, I want bearish into this weekly fair value gap. But NQB on that shit. Oh yeah, EU. First, let's look at DXY actually. Oh, it's up here. DXY. All right, so holy shit, this is ugly, bro. This is actually gross, brother. All right, so if we're going to expand, right, we want the high of the day. Do a little equal high. I want the high of the week to form like somewhere in here, right? If we're going to go lower, but I couldn't tell you what's going to happen next week because we're looking pretty damn bearish, brother. I don't want to call a reversal yet. Now this is a manipulation of a consolidation range, so we'll see. If early week does some shit like this, boom, like that, then I expect these highs to go, right? And then I would be bearish on, whatever you call it. So if we're going to, Monday should expand if we're, it's NFP week though, but Monday should expand if we're going to be bullish. Like early week should do that, I feel like, because we've already swept this. There's no reason to like sweep it again, but it could do it. But yeah, let's see. Let's go see EU and GU though. Again, looks like terrible, like just absolute shit. But basically, like if DXY is gonna be bullish, you want to short EU because it's weaker. You can just see it. If I go to GU, it's much more bullish as you see. So if DXY is bearish, you want a long GU because it's stronger. That makes sense. But I can't even like frame like get off of this. Like we took out this high here. There's no target really as far as like internal range. So you have some lows. Oh, these lows look pretty good. I'm not gonna lie. They look really good. What's up with this high? Uh, 25th, Wednesday the 25th. Wednesday the 25th. High. What the hell? Oh, I gotta mirror this shit. Looking for SMT. Okay, so yeah, we do have SMT here. I'm kind of leaning bearish, to be honest, bro, on DXY. I mean, we have S&P the highs. The previous week high hit this weekly external range, and yep, these lows just like hella sus. Go to the hourly. We have this chain of state delivery. Yeah, I would actually look bearish probably. I would want to see something like this, small opposing run up towards these lows. So we'll see what happens. Yeah, I really want to see the closure. Oh yes, shout out to the goat. You are the goat. Box transparency. Dude, I think I have a different one than you. Am I blind? Hmm. Box transparency. Oh, it's right here. Is that good? Oh, that's text. Whoops. Oh, let's go. That's it right there. Go 85. Text. That's like 100, bro. I don't want to see that shit. All right, thank you for that. Oh, disable text. Okay. Nice. Put that up here. Can I not put this up here? Whatever. But yeah, probably gonna hop off there. Oh, I'll catch y'all later though.